All right, onto an ET Now exclusive. We chart Akasa Air's flight path as India's youngest airline scales up in a crowded sky with a clear focus on discipline over breakneck speed. Akasa is betting on controlled expansion rather than reckless growth. But can this hyper-growth story turn profitable and sustainable? When does the IPO runway open up? And as domestic capacity builds out, is international expansion the next big lever for Akasa Air? We caught up with the founder and CEO, Vinay Dube, to decode the same. Take a look.
We had a wonderful second half of the calendar year 2025, or the first half of the fiscal year 25-26. For us, our top line continues to grow, our margins continue to improve, our network continues to expand. And so really this was a pretty phenomenal 2025 that we had. Top line growing just shy of 50%, EBITDA margins expanding by approximately 50%. We're now at 150 daily departures, 26 domestic routes, 6 international routes. Our codeshare partnership with Etihad is going well. And we attribute that to the wonderful employees that we have. In terms of philosophy and learnings for Akasa that we've employed from day one, it's really been plan. When you are like Akasa, the world's fastest ever growing airline, it is absolutely essential for us to be maniacal about our planning. And this goes to India in general, because India is the world's fastest growing aviation economy and will continue to be the world's fastest growing aviation economy. So planning is very, very essential. And then the second philosophical tenet of Akasa is to be a bit conservative. Because if you're not conservative, then your troubles are going to be transferred either to your employees, or your troubles are going to be transferred to your customers, or your troubles are going to be transferred to your investors. And so we have to be a bit conservative in the way we look at it. You can't chase that last penny. You have to focus on reliability and dependability, because we're counting on ourselves to be here for decades, right? We're not building an airline for 1 or 2 years. Everything we've done at Akasa from day one is to build this airline for the next generation. And with that in mind, you have to plan, but you have to plan conservatively as well. And that's the way we have always operated. And if you look at what has transpired, let's say in the month of December, certainly that has reinforced that particular learning.
It was an unstoppable runway for the airline industry in 2025 till we hit a air pocket in December. There is always this fear, right? Means what's going to hit? You can factor in geopolitical risk, how it can be disruptive. You can factor in commodity risk in terms of oil or ATF in case of airlines, or any other employee thing. But organizational planning risk is something which is that you said. You plan till the last digit. Is that something was missing in the industry, or is that one-off for the industry?
Yeah, I think, to be honest, Sajid, I cannot comment on how other airlines do it, right? I'm not in their boardroom. I'm not, privy to their Excel spreadsheets. So it's hard for me to comment on it. I can just say that, there's both a responsibility and a methodology that comes with being a very, very fast-growing business. And planning is one of them. But I also want to bring in my second point, which is to be slightly conservative. In any business, if you're chasing that last paisa, you always tend to lose. Something always tends to go wrong. And so, for us in aviation, if you look at the 40-50-year history of modern aviation, being well capitalized is a way to hedge your risks against the ups and downs of fuel volatility and FX volatility and geopolitical risk and other risks, right? And that's the reason why Akasa has been well capitalized. And we've spoken about being well capitalized from day one. So very similarly, when it comes to operating risk, we've got a very mature board. We've got a risk committee. We get direction from our board in terms of how to manage our risks. And that's just fundamental to our DNA.
You know, interesting that you said that, and you spoke about capitalization as well. You've been the fastest growing airline in the country, been able to scale up to nearly 32 aircraft in the span of just 3 years, since 2022, if I'm right.
Correct.
What is the journey here, and how well are you capitalized?
Yeah. So I think you're absolutely right. We're flying 31 aircraft today, and we will be getting delivery of aircraft faster than one a month for the rest of our lives. And that pace, it's a non-linear pace between now and 2026. As you know, we've got an aircraft order of 226. So from a journey perspective, there will continue to be growth. But as we scale, you will also get profitability. I had mentioned in our previous conversations that we will continue to be well capitalized. We've just closed our second round of capitalization in the middle of August. So for the moment, we're well capitalized. But philosophically, our view is that being well capitalized is one of our sort of anchor philosophies, because that is a hedge against volatility and risk, and we will not risk the business. You'd rather philosophically have a smaller share of a strong, well-functioning company than a larger share of a company that's on the edge, and that's our philosophy. And so we will continue to remain well capitalized. And so from a journey perspective, with growth, you will get profitability and free cash flow. And so the thought, is that we've got a very exciting future. And the country has a very exciting aviation future as well, with lots of growth, but not just capitalization, but stability, dependability, on-time performance. These are very essential elements of our growth. In the month of November, Akasa was the nation's most on-time airline. This is based on DGCA statistics, right? So that's a very, very important element of our future as well, that needs to be articulated.
In the second round of capitalization, who were the investors, and and your airline has been backed by Rakesh Jhunjhunwala family.
Correct.
So were they part of it?
Yes. So the Jhunjhunwala family, we're honored that they have, in a manner of speaking, doubled down on their investment. So they absolutely came in a very meaningful manner in round 2. But we were also fortunate to have the likes of Premji Invest, 361, and Claypond Capital, which is the family office of Mr. Ranjan Pai. These are, as you know, some of India's finest and most discerning investors, and high quality, patient capital, the highest standards of governance. And so we're incredibly honored that the Jhunjhunwala family has doubled down, but we couldn't be happier with the new set of investors that we've also got.
You articulated well that you're going to have more than an aircraft coming in every month from here. Till 2032,
Correct.
226 aircrafts will be
Correct.
in your fleet. Will there be more orders for aircraft as you grow?
Yes, for sure. As I said, we're planning this airline for generations to come. So I hope my grandchildren will fly on this airline. And given that my kids are still young, we have to plan for decades ahead, and that means a follow-on order. So 100% we will be placing it. Not any time in the course of the next 12 months. It'll take a little bit of time for us to place it, but yes, for sure we will.
Give us a small sense of the model that you've worked in. You've been fastest growing, going to almost 26 destinations in India, more than 6 globally. When we talk about an airline, we talk about not only the scale and the fleet size, but also financially, how you are modeling the entire airline so that you generate enough cash from operations. Is the airline generating cash from operations today?
So not today, but that will come in due course. So as we have planned our financial roadmap, and I use the word planning again because it's very essential, not just to plan an operating roadmap, but a financial roadmap as well. I will say that we're well ahead of our financial roadmap. So the way India has responded to Akasa, the way consumers have responded to Akasa, our top line has grown, in a manner that is far ahead of our plan. So if you look at the unit revenue growth, it has been far ahead of how we had planned it, and that's partly because of the way consumers have responded to Akasa. They're happy with the reliability, they're happy with the warmth and the kindness that they find in Akasa, and we've been rewarded not just from, not just from, as they call, an independent traveler, people on leisure, but also the corporate traveler. We have over 1,300 corporate contracts today, which is sort of unheard of, both from an airline as young as us and an airline, with our kind of scale. And corporates are knocking on our door. Please get more planes. We want to fly you more, add more destinations. So the response we have got when it comes to the revenue side has been fantastic. And that's been, part of the reason I say that our financial planning versus our financial execution has not just matched, but our execution has been ahead of the financial planning that we have. And we don't see that changing. Similarly, when it comes to our cost performance, because having cost leadership in our industry is very essential. And so as we have planned our cost future, which is much more predictable than the revenue side of it, we're also tracking ahead of our plan. So I'd say, this is something, as we've said, we're building a financial foundation for generations to come, and we're very pleased with the progress that we've made.